Hello everyone. Right now I'm doing this video Saturday, February 16th, 2019 around 11:40 p.m. Here in New York City. So this week the stock market continue its relentless rise upward, and what's interesting is that it actually, for the first time since the huge move down since last October 2018, it actually closed above 200 days moving average. So the question on everybody's mind is, what's next for the stock market? So in this video, we're going to be using my proprietary Pendragon 321 system. The reason it's called Pendragon 321 because it consists of 3 price lines, 2 sets of trading signals, and 1 momentum indicators. That's it. And it's always consistent. And we're going to be examining SPY, QQQ, and later on I'll give an update on the Bitcoin futures, which I did in a previous video. So we're going to give an update, see what's going on with Bitcoin. Okay, so let's get started right now. So as always, you're looking at 3 charts. The leftmost is the SPY daily chart. That's the S&P 500 ETF. The middle one is the SPY weekly. And on the right hand side is the SPY monthly. So for a quick review. 3 power lines. The green is the short term, the pink is the medium one, and the purple is the longer one. And the trend GPS signals are consist of blue or pink crosses. When the blue cross appeared, like over here, that means the beginning of an uptrend. Okay, and when we have blue dots like these guys right here, that's the confirmed long signal. So when these signals appear, the blue dots appear, you will be going long. So if you understand just these 2, you pretty much understand 80% of the system. Okay, the rest are the triangle indicators and the LBR 310 oscillators. We don't use them as often. So for now, our purposes, we can just analyze the market with these. So right away, I want to draw your attention. We're looking at the monthly chart here. So there's blue dot confirm up signal that occurred last month. So what that means was we actually we will be, based on the system, I'll put a point A right here, we'll be going long the market. Okay, since beginning of this month, when the price go above. So right now, the reason, so this could give an explanation to why the market is going up, because on the monthly chart, okay, on the longest time frame, also you can say these are the people with well, a lot of capital, because they're looking at the monthly chart, that they're really pushing the stock upward. Okay, so that is the case for the bull case. Now let's go to the weekly chart. On the weekly chart, okay, everybody see it? We here there's a pink cross, so that shows the beginning of a downtrend, according to the chart, that happened December 21st. And that is the only chart right now here that actually still remain bearish. And if you look at the middle panel right here, these 3 dots, okay, actually it's for the last 3 weeks, the system, okay, the trend GPS system is giving us a potential short sell alert. Okay, so as the price moving higher, you will notice you haven't turned into any pink dot. That means it's the signal hasn't been triggered yet. Okay, so we haven't really entered the market on the short side yet. However, as the market goes up, it's still in the short sell signal alert zone. So where will we trigger this possible short sell signal? Okay, if it cracked below the low of last week, which is 270.03. In other words, if you go below that, or if you reach 270.02, okay, right here, 270.02. If the market dip below that next week only, because we're looking at a weekly chart. Okay, so each bar, these the signals are generated on a bar to bar basis. So for next week only, if the price dip below 270.3, or actually you have to that means the price had to reach 270.2. okay, then a short sell signal on the weekly chart will be generated. Okay, other than that, we're going to continue to monitor this thing until for for a short signal. Okay, now let's go to a daily chart. So the daily chart, you will also notice there is a blue cross. A blue cross showing us a long trend has begun, but yet so far there hasn't really been any long signal, on the trend GPS. There is a minor long signal here that's based on a triangle. Everybody see on the triangle? That's the second panel down here. They've been pointing up. There's two of them, in fact, been pointing up. So these are just the weaker signal that you can go long with. Okay, and the interesting thing is that, as I mentioned, okay, the yellow line. Let me get rid of these things. The yellow line is actually the 200-day moving average. Okay, let me right now disable the Pendragon 321 3 power lines, so make the chart more clear to see. I'm also going to blow up the chart a little bit, so it's easier for those who are using this to see on a cell phone. So the market has risen above the 200-day moving average quite convincingly. Okay, actually Friday, it gap up quite. So everybody want to know, because as we all know, supposedly Wall Street told us that if the stock traded below the 200-day moving average, then we are in a bear market. When the stock traded above the 200-day moving average, then we are in a bull market. So, everybody's anxious to know, are we, is the bear dead? Is the returning of the bull market, or what's going on? Well, if you're a bull, obviously you've been very happy, since December 26th, that's when the market started going up. If you're the bear, you've just been waiting on pins and needles, trying to look for a short opportunity. Well, as we all know, stock doesn't go up straight line indefinitely. In a very, very rare occasions, in a melt up or parabolic move. But I want to draw you guys' attention back to the past. In the past of since that's last October, let's see what's going on every time we go above the 200-day moving average. So right here, it went above the 200 moving day average. I'm going to label this 0.8. Okay, look what happened. So after that, it went below that. Okay, so if you long it, you will get killed right there. And then market promptly got rallied back up again to above the 200-day moving average. Okay, that's right over here. That's point B right over here. Right? And if you got long over there, as supposedly Wall Street told you, because return of the bull market, and lo and behold, just like clockwork, they kill the market again, go down there. And then they bring the market back up again above the 200-day moving average. Okay. Let's see, let's call this point C over here. Okay. And so they did this like 1, 2, 3 times before they actually allow the market to really, really drop. And right now, if you look at it, so since the December 26th, the market has been going up. It's almost shaped like a V. So if you look at it, you can even make an argument that maybe right now, right here, potentially, we're going to have another similar pattern like what we had back in ABC. Okay? Whether it actually happened or not, it's remained to be seen. But nevertheless, we have to prepare for that possibility. And remember, I just mentioned on the weekly chart, okay, there's a possibility for the market going down. If we go below the 270.02, can trigger a possible short signal. Otherwise, in the meantime, on a monthly chart, right now we are still, in a long signal that ranks. So right now, at this point, you guys might be confused. How can we go long and go short at the same time? Remember though, don't forget, this is totally 2 different time scales, okay? One operates on a much, much longer time frame, which is a monthly scale, okay? That is going long. And the other one operates on a smaller, slower time frame, which is on a weekly. So in other words, both sides can actually make money. Depends on your time frame, your how nimble you are. So remember, there's a saying in Wall Street: bulls makes money, bears makes money. However, pigs get slaughtered. So in other words, doesn't matter if you go long or go short. As long as you know what you're doing, you can make money. The worst thing you want to do is be greedy and get slaughtered in the market. So now let's go back to our discussion. So right here, at point D, is it possible that you'll rise a few more days and the market go down? It's totally possible. And given the fact that, it's been going up quite, relentlessly for the past, month and a half, or maybe almost 2 months now, I would say a correction, it's a very strong possibility in the near future. So having said that, okay, if right now we know or we think, a correction is coming, at least in the very near future, okay, so where would this correction possibly be? Okay, that's where we're gonna need the Pendragon 321. That's where it really shines. Let me remove these guys again so it's easier to see. And let me put the lines back. Well, first of all, obviously, one possible area is that you might stop in the 200 days moving average. But based on the history I just show you guys, that's rarely the case. Okay, most likely it's not going to just stop in the 200-day moving average. If anything, the 200-day moving average is being used as a line to make people, make wrong judgments. Okay, so now, a lot of times when people think about predictions, especially the beginning traders or the retail traders, they want to know, they go like this: tell me where the market's going to go. Just tell me what to buy, where the market going to go up or down tomorrow. Okay, that's what they focus on. That's what they so-called prediction. And if you cannot do that, they don't think you're any good. But in fact, if you talk to any professional traders or anybody who's been involved in the market for quite a while, they more often than not, they will tell you, at the end of the day, they really have no idea where the markets are going, do they? They really don't. All we can do right now is identify a few key points, or I call the pressure points in the markets. What are the pressure points? What are the pressure points? A pressure point is where the market most likely to stop or pause. If the price is above the pressure point, when they come down, the pressure point could become a possible support. If the market rising from below to going up, then the pressure point could possibly become the resistance point. And I want to draw you guys to an attention. If you think about it, if you ever seen on TV, you've seen the floor traders trade, or the specialists, okay? Usually they just have, in the old days, okay, now that they use tablets now. In the old days, they just have a few pieces of papers, okay, or now that you have tablets, okay? And all they do is that they check down a few important numbers, and they see how the price react when they reach those numbers, and they make their next decision, and they react to the market. Their goal is not to predict where the market is to go, will go next, except, other than, instead, they rather try to react to the market based on how the market act on a certain pressure points. Okay, that's from the floor trader's perspective. And if you think about the big institution players, it could be funds and stuff like that. These are the people who've been invited to, let's say, Bloomberg or CNBC, these famous analysts. Okay, they will be asked to give their forecasts on, let's say, Apple, Apple's earning for the next quarter, or what Apple's share price should be. These are the biggest institutions who spend a lot of money hiring the smartest people in the world, give them the best computing equipment in the world. Okay, and a lot of these people, they themselves have very strong analytical, quantitative, and computer skills. And not to mention, these Wall Street firms, they also have, a staff of best intelligence gathering people at their disposal. What they are trying to do is not try to analyze the 50-day moving average, or try to analyze head and shoulder formations, or try to analyze, if this is a divergence or convergence based on the MACD or stochastic or what have you. No, they are trying to project, or try to find out, try to estimate earnings, and hopefully can derive at a fair price for the stock for the next quarter. So for example, based on all their work, these analysts, they say Apple computer should really be worth $100, okay, per share. Give an example. Let's say Apple computer should really worth $100 per share. Then the task becomes very simple, isn't it? Anytime, if the Apple computer, the price for Apple is way above $100, what should you do? You should be selling. You should not be holding the stock. But if Apple, stock for Apple is below $100, what should you be doing? You should be buying, right? Again, that is a price-based analysis rather than all these fancy technical indicator analysis. So what I'm trying to do here with Pendragon 321, with these three lines, are trying to derive, let the market itself tells us where its pressure points are. This is attempt at the price analysis, rather than try to say, this is a divergence, therefore it should go long, or because the moving average crossover, therefore it should go short, or notice and that. No, those are, at the end of the day, those are not important. Do not get caught up in that trap. Once you get caught up in that trap, ego take over. And in fact, that is the very mark of an amateur and the retail traders. They are so obsessed with predictions. And in the previous video I called about, they're so obsessed getting into the game of competitive fortune telling. Okay, I know it's very hard to resist. In fact, in many channels here in YouTube and on websites, I mentioned this before, in many print media and a lot of things, you will see these people come and say, I am so amazing. I'm the greatest ever. I can predict tomorrow's stock price down to the last tick. You know what? That's not true. Nobody can do it consistently. The reason the greatest fund managers, they are so great, is not because they can predict the market with 100% or with infallible accuracy. It's because they know how to react to the market, how to dance with the market. And in fact, let's say position sizing, okay? Your money management, your trading psychology, and your trading discipline, and other important factors are far, far, far more important than knowing where the stock is going to go, than your analytical abilities. All right? So let's go back to here. So if right now, we're looking at the daily chart. If the stock is going to correct now, where it's going to go? The very first level, according to this chart right here, is 269.49. That's according to the green, the green power line, okay, the short term. And the next one would be 267. Okay, this is based on the daily chart. And the next one would be at 263.62. Now, right away, okay, let me just label this with different colors so easy for you guys to see. The pink color corresponds to the pink line, and the purple one corresponds to the purple line. And the yellow, the green number is going to correspond to the green line. Right away, you guys should notice that these three lines, these three numbers are very, very close to each other, right? So what that means is that this pending support is going to be a very strong support. And if the market were to have any hope of resume another strong downtrend, they must have first break through these three numbers first. So what that's telling us, the characteristic of the market due to this last almost 2 months of strong rally has fundamentally shifted. Okay, if you look back in the past, when the market was going down, all right, remember we mentioned that before. It took about 3 attempts at a 200 days moving average, okay, before you actually smoothly, completely go below it and have that big, huge drop. So this time, at this current time, could it just slice right through it? Yes, anything is possible, but is it likely? Given the current factors, not really, because guess what? All the bad news were already known. The reason that last October started this entire huge down move was because, first of all, if you remember correctly, people worrying about that the Fed was going to raise the interest rate too high, thereby killing the recovery, or put the U.S., invert the yield curve and put the U.S. into recession. Plus, the news out of the Eurozone wasn't good. The news out of Japan wasn't good. And we were fighting a trade war with China, and China might have a huge slowdown. So all these things added together, investors were worried. So that had this huge drop. In fact, remember last December 2018 was the worst December in 87 years. But since the day after Christmas, December 26th, we have this huge uprise. Okay, so because this strong, huge uprise, now the characteristics has changed now. If we're going to start again, you had to go below that. So now let's look at the weekly chart. Okay, on the weekly chart, we also have three lines, because each line gives us a number. It's always going to be the same 3 lines. And by the way, they are the same exact formula. But when they calculate on the weekly chart, it's obviously a different data set, because on the daily chart, it's going to have 5 times more data set than they do on the weekly chart. So on the weekly chart, the first number we have on the pink line is 268.06. By the way, they're on the right side here also. See where my arrow is? The pink one's a little bit covered up by the green number, but you can still make it up. It'll make it out what it is. And for the green one is 264.94. Finally, for the purple one, I believe that looks like a 261.1. Okay, so again, let me just color coordinate them so it's easier for everyone to see here. Second one would be green, and the third one would be pink. All right. Okay. So now let's go to the monthly chart. Again, 3 sets of numbers. The green one is 267.73. Everybody see it? It's actually labeled right here. And the pink one is 259.44. And the purple one is 230.47. So let me color coordinate these guys again so it's easier to see. Okay. Now, so if you look at the purple one, look at the weekly chart, the 3 lines are pretty bunched up together again, just like the on the daily chart. And so you know what? Before we do that, let's go look for some corresponding numbers. So we know on the upside, the highest number on the daily chart is 269.49. Okay, do we see any number here? Well, not quite, so that's fine. So that's going to be your first possible support level. Now on the second one, the purple one, second number is 267.00. Okay, 267.00. The longest term on the daily chart corresponds to the medium term on the weekly chart, which is on pink one is 268.06. Okay, that's this guy right here, and that is going to correspond to the shortest one on the monthly chart, which is the green number, 267.73. So 267 and 267.73, they're relatively close. So that is going to tell us is that it's going to be a very strong support if it ever gets down to that. And finally, if you look at 263.62, 261.10, that's another possible very strong one. So and 259. So basically, if we break through, we can say that if we break through 259.44, the next number will be this purple line right here. Okay, purple number right here, 230.47. So what does that tell us? These are your possible profit-taking targets, your initial or scaling down profit targets if you're shorted. And if you're a longer-term player, okay, let's say you're a monthly player or you're investing for long-term, and you don't have a lot of exposure to it, you're actually looking for a place to add in your positions. Those are a possible position for you to add onto a position or initiate long-term, initiate a long position. Okay, so that's why a lot of times people want to ask me, should I go long or go short? It's really hard for me to say because I don't know your particular sets of circumstance. I don't know whether you are a long-term player, you are a short-term player, you're a day trader. If you're a day trader, you won't even be looking at the daily chart. You'll be looking at the minute charts. Maybe and even a day trader, I don't know how many trades you do per day. Right? We show this another thing. We can look at tick charts, but for purpose here, we just look at daily chart. So that is what we're going to be looking at. Watch out for. So, what do I think the market might be doing? Well, is the market going to continue to go upward? Yeah, I mean anything is possible. But as we said, the market is not usually doesn't go straight line. So there is a very strong possibility that it will do some correction, and depends whether the market break through those lines. We can determine whether this is a correction in a bull market or this is a reversal and going down. And this is quite critical at this point because look, the market has already broken above all the possible resistance, all the 3 lines. So right now, let's go back, look at the monthly chart. Okay, everybody recall the previous, the beginning of uptrend here. Since I already labeled that A, let's label it B, C, D. Now, remember, when B first appeared, that's all the way back in March, the end of March. Okay, actually beginning of April 2011, almost 8 years ago. That this is current strong bull run going upward, and it lasted for what, almost 8 years before we have a real substantial, well, second correction, other than the C and the D. And each time between the corrections, the market ran for quite a while. Everybody see that? That's your first wave up. This is on the monthly chart now. That's why sometimes it pays to look at a longer time frame. And that's why a lot of time they will tell you sometimes you want to hold stock for the long term. Don't try to go in and out. There's a lot of wisdom in there, because if you can just catch one of these trends and you invest it for years and years, especially if a big institution, big fund manager, you are in charge of hundreds of billions of dollars. There's no way for you to get in and out of the market that fast. So all you can do is invest for the long term, and all you have to do is catch these huge trends. Then you become big, and that's why they are big, I suppose. All right. So we go back, right? And the last time before B, where's B coming from? This uptrend. This uptrend was coming from, remember this? This was the 2008 financial crisis, that last bear market. Okay, but this is on the monthly chart perspective. So right now we are at point A here now. Are we going to turn into another bear market like 2007 and 2000? I did a previous video on that. I show you guys how that behaved. Basically, if there's going to be a true crash type of bear market, okay, what the market need to do is crash below the purple line, and they have to do it quickly. Right now, it's rallying back up rather strongly. So if we're going to crash, it better be crashing sometime this year, or maybe even before the fall, okay, before September. And you have to really go down, because that's how typical the market acted. The longer this thing drags on, is stay above the 3 lines, the more and more it looks like this is actually, it could be, it's just not a correction. But what happens, we don't know. We just have to watch the market. But now we have these ideas. We have all the different scenarios in mind, so we know how to react. Okay, so that's the SPY. Next, we're going to look at QQQ. QQQ, if you look at it, that's obviously the NASDAQ ETF. It act pretty much very similar to SPY, because those two are highly correlated. So a lot of things that we go over there, we already mentioned. So I'm not going to go into it. I mean, basically the scenario analysis is the same. Only difference I want to go over is the update you guys on the numbers. So in case you are trading this, you can have some numbers to go with it. So let me get rid of this moving average. So right away, firstly, okay, on the daily chart, let's try to get the purple number and the green number. The purple number is 167.04. 167.04. Let me just make sure that is true. You guys will see it's power 3. Okay, power 3, 167.04. That's the purple one. And for the green number is 166.91. These two are very, very close. 166.91. Okay. And the pink one is 163.88. So let me color coordinate these guys. Okay. All right. Next, on the weekly chart, the pink one's 167.05. And green number is 164.54. And the purple number is 160.68. Again, let's coordinate these guys. Later on, you see something interesting. Okay, let's color coordinate these guys. All right, and now on the monthly chart, the green number is 160. Whoops. Here, no, let me try that again. Let's try this. Oh, no. My computer crashed. Okay. All right, I'm gonna have to stop this recording right here, and I'll pick it up later. Okay, everyone, sorry about that. I'm back. So let's continue to label these numbers. So now we move to a monthly chart. So it's 167.18 for the green line and 160.66 for the pink one and 155.38 for the purple one. In case you guys wonder, they all label on the right hand side here with my arrows pointing. Okay, so you guys can just look at it, and let's color coordinate these guys so for better reading. And let's see, give me a second here. All right, that's pretty good. Now, so basically, oh yeah, before I do that, let me give a quick thing, because on the weekly chart, if next week only, just like SPY, the market drop below 167.98, 167.98, or if the market ever reach 167.97, okay, let me just write that here, 167.97. This is the magic number that would trigger a sell short trade. Okay, this is the number that would trigger the short sell. All right, now let's go back. Let's see what's interesting about this number. So again, basically, as mentioned before, just like SPY, if the market correct, you had to first break through 3 lines. But I just want to demonstrate you guys to you how interesting something really is. Okay, because sometimes the math just work beautifully together. We know QQQ is not as widely traded as SPY. So theoretically, everybody knows for something that's not as widely traded, sometimes the math is not as elegant, or the results not as elegant. And don't forget now, we are looking at 3 different charts: daily, weekly, and monthly. So they have 3 different data sets. For every weekly bar, there are 5 daily charts. So in other words, for every 1 data point on the weekly chart, there are 5 data points on the daily chart. And for every monthly bar, there are 4 data points on the weekly chart, right? Or they're going to be probably 20 or 21, depends on how many trading days are there in the monthly chart. So just imagine there's if you take a monthly chart, for 1 monthly chart data point, you're going to have 20 to 21 different daily chart data points. And now see how the math works out. So right away, on the left hand side, look at the daily chart. 166.91, that's the green line. 167.04, that's very close. So in that level, 167-ish, okay, give or take, that's going to be a very strong support level. Now, what is the longest term on the daily chart? I'm going to put this over here, 167.04. It's going to correspond to the median, which is the pink number on the weekly chart. You see how close they are? 167.04 versus 167.05. Now, what's a medium on the weekly chart? Of course, it's the shortest, which is the green number on the monthly chart. We get 167.18. You cannot get more elegant than this. Okay, guys? You've seen this again. I show you in the other videos. Sometimes they just work so beautifully together. So that means intrinsically, these formulas, they work. Okay? They correspond and they're interlocking. And they have a very robust, almost like a self-symmetrical, geometrical, like a fractal kind of, I don't know if that's a proper mathematical term, but they work out beautifully, because one is calculated from for every 1 data point on the monthly chart, you're going to have 4 data points on the weekly chart, and you're going to have 20 to 21 or more data points on the daily chart. And yet, the same formula, plotting with all these things, they give you the similar numbers. Only off by 0.14 if you look at the monthly versus the daily, and then in the case of a daily and a weekly, only off by 0.01. Okay, that's elegance. Okay, that is just, I don't know how else to say it. Okay, now does it, and the thing continues. Sometimes not, they're pretty close. Sometimes not this close. And right now we look at look at this one. What is the longest term on the weekly chart? 160.68 is going to be, in other words, what's the purple on the weekly chart? It's going to be the pink on the monthly chart, 160.66. They are only different by 0.02. Okay, 0.02. So these guys might as well be the same number. So at the end of the day, instead of 9 numbers, okay, of which one of them bound to hit, like most people did with moving average analysis. We really have, okay, these two numbers are really close, 167, that's first sets of number. Okay, even argue 163 AA, 164. Okay, I'm sorry, and 164 point, that's the second set of number, and the third set of number is 166A, 166.6. So we have 1, 2, 3, 4. 4 sets of number that cover from the upper zone to the lower zone. That's on the QQQ. Okay, everybody saw beautiful that workout. So, all right, let's just give a quick, that finish the SPY and the QQQ. Let's go to Bitcoin futures. So in the last video, I talked about the Bitcoin futures, and right away, remember, if you recall from that video, if not, please go look at it. We simply don't have enough data to perform an analysis on the BTC, which is a Bitcoin futures on the monthly chart. So that's gone. And on the weekly chart, again, I mean, we, other than short signal over here, we don't really have much of a price line, power line, and stuff like that. So that's that. Okay, so only thing that left us is the daily chart. So last week when I did the video was last Saturday, I believe. Okay, so last Friday was February 8th. So the last data we have on the last video is February 8th. And then the video, let me blow up this chart a little bit bigger. I have mentioned that pay attention that the pink one is going to serve as a very strong resistance. Okay, and and it did not close above that, so we're going to watch for, and also we're going to watch for it to turn, because it's going to be between the two pink and green lines. Okay, you guys can go back to that video and see if what I said was true, because I said that ahead of time. And so look, last week, this week, well, the past week, okay, not the week of February, ending February 8th, is a week ending February 15th. The previous week, that's exactly what the price been doing. Bitcoin being hovering between the two price lines, between 36.54, that's the pink line, and the bottom one, that's about 3564. So a lot of people want to know prediction. I mentioned it before, up and down, but you guys are missing the point. There's another form of prediction, knowing where the pressures point are. Wouldn't it be a valuable information if you know these two lines are where the market most likely going to be in in a trading channel, and this thing shows you. Okay, and this couldn't have worked out better than myself. I don't control the Bitcoin prices. In fact, I don't even trade the Bitcoins. I don't even look at Bitcoin chart until last week, because two of my subscribers has requested it, and I just put it out there, because they're great, and I want to perform analysis for them, also as a challenge for the system. So now we do a quick update. Now, here's the interesting thing though. When Monday came along, February 9th, we have a confirmed short signal. Everybody see the pink dot over there? That's a confirmed short sell signal on the Bitcoin. So we will be shorting, okay, the next day, actually on the 9th, on the low of this bar, which was actually 3580. So that's say we got shorted from 3579. We'll be gotten short from here. Okay, so let me do that. We'll be shorted BTC at 3579 since February 12th. I'm sorry, 12th, February 12th. That's last Tuesday. Now, where would I place our stop loss? Our stop loss, we could place it above the high, the previous pivot high, which was at 3730. So the stop loss level would be above 3730. Okay, everybody see that? So this is on the daily chart. So we'll see how this trade plays out. So far the market is not doing much. And in fact, it has entered this triangular thing, so it's still in the trading range. So what we're going to do right now is that we going, basically we're doing a pretty tight stop as is for the Bitcoin. Okay, so if the price broke below the support right here in the green line, which is 3565, let me label that guy. color coordinated, then we have a good possibility that the price can go down for a substantial trend downward, another leg down. However, you know what, guys, let me put this over here so easier. And let me label it. I like cyan, this color, so that's a trade. Maybe we should put a red because it's a short. Let's put red. It's a shorter trade. And however, if the price broke above the top of this channel, close above it, okay, which is 3654. We gotta watch out now. Okay, we gotta watch out now. Even though our stop loss is still, initial stop loss is above that, but I would be very cautious if the price broke above 3654. Okay, then we have to consider maybe take a loss on our trade. Okay, and perhaps we even go long. We have to see really see if any generate signal over there. If not, you know, because the triangle indicators here, they are pointing up. Everybody see that? There's a potential going long signal. Oh, actually, I'm sorry, they did go long. You know, we do have a signal here. The line does go here. So I mean, these again, these two trading signals are independent of each other. Right here, there's a confirm up there. So if we get out from 3595, we can reverse there already. Okay, it's up to you. So basically, this short trade, it's up to you to which trade you're going to take. But just remember, you're going to keep your stop loss very close by. So basically, until and unless the price broke above these two lines that's holding the price, Bitcoin is not likely to go anywhere significant anytime soon. Okay, that's basically the update and analysis for that. So we're going to you know, watch it for a few more days, and hopefully next time I do the video, I'll do another update, and let's see how you know, how the whole thing turned out. So in this video, I have given you some concrete trading signals and stop loss point based on this trading system. So again, this is not intended as a trading advice. This is just what I see based on a trading signal. And if you want to do any trading, any investing, or any kind of sorts of activities, you have to consult your own financial advisor, see what's the best for you. Okay, that's it. This concludes this video, and I hope to see you guys next time. And oh, by the way, if you haven't subscribed already, please consider subscribing and leave comments. Let me know what type of instrument you would like me to analyze next, or any other topics you'd like to discuss. All right, I'll see you guys next time. Take care, and bye-bye.